When you say I've tailored my presentation, I actually say I should probably ripped it up early on. And so what I want to do is I want to just give you just give you my take on where we are in terms of the impact of the coronavirus on the economy, and very much leave it open to a discussion and pick up some areas about where we think it might have a particular impact and what we might do to try and mitigate it. So it goes without saying that obviously the biggest issue that we're worried about here is not about the economy, it's about the impact on individuals and the health and the wider impacts that will have over time. But it goes without saying that if the virus, but particularly the response to the virus, and I'll say a bit more about that in a minute, but particularly the response that we'll do to try and combat the virus, then there's a possibility that we're likely for quite a significant economic shock in the short term. As the Chancellor was emphasising in his budget speech this week, the hope is that shock will be temporary, but there is a risk that temporary shocks can develop hysteresis effects, can have long-term impacts, and these can be quite significant as well over time. So one of the things that we need to think about is separating out what's happening in the short term, supporting businesses and individuals through that short-term shock that we'll face, to then ensure that when the recovery does come, as a temporary effect, that we're then best placed to A, recover quickly, and B, get back to normality in terms of economic activity. So, but just to recap, one of the quite interesting things is questions that are emerging about how resilient is our economy to cope with a major shock to supply or to demand. And this chart on the left-hand side here is Scottish growth rate. So the black line is the annual growth rate, and the red line is the quarterly growth rate. That black line should normally be closer to 2%. So normally our economy should be growing at around about 2.5%. That's our trend growth. And we've already heard from Stephen earlier talking about a world of slightly slower growth in the longer run. We're actually already there. Our economy has been growing relatively slowly for a considerable period of time. We're getting new data next week, which we think will come in at showing that last year was again just below 1%, around about 1% growth in our economy. So really quite fragile growth over time. And one of the really interesting things as well, and you'll know it much more at a local level, if you look at that aggregate picture for Scotland, you get one story, but then if you look at what's happening at a regional level, you get a completely different story. So there's parts of our economy, this city for example, that have been doing quite well over the last decade or so, significant growth in jobs, significant growth in investment, putting actual pressure on infrastructure because it's actually growing so quickly. You then look at other parts of the country, and growth has been that much weaker and that much slower and that much more fragile. And actually one of the trends we've seen in Scotland's economy over the last 10 to 15 years is quite a significant shift from west to east across a whole range of different indicators. But as I mentioned, this trend that we're seeing towards relatively slower growth isn't new. This chart here, again on the left-hand side, is the average annual growth rate in Scotland taken over a 10-year period. That's the red line, the grey line for the 20-year period, and the black lines for the 30-year period. So if you look at the red line in particular, so average annual growth over the last 10 years has been just above 0.5%. So that's the average annual growth we've had has been trending at a really quite relatively low level. So the question about what will our economy look like if we start to move towards a slower period of growth, actually, we've already been having that, and we've been having that for the last decade. And one of the quite interesting things that if we are to get a bumpy ride over the next few months, typically in the run-up to previous recessions, we've been growing about 2.5%, between 2 and 2.5%. The last time, since the last recession, we've been growing at around about 1%. So one issue that we need to think about is there's actually less resilience in our economy than there otherwise have been prior to previous recessions. So earnings, for example, have just recovered back at the UK level to where they were prior to the financial crisis. So if there's any hit to our economy through the coronavirus, the actual slack we've got, the capacity to observe that, to offset that, is actually likely to be relatively limited. And even before we had the threats of the coronavirus, the Scottish Fiscal Commission were thinking that we're going to grow by around about 1% over the next few years. So the questions that I've been listening to about how do you balance well-being and inclusive growth with actually getting a competitive and growing economy, are really well made and really pertinent questions in the debate that we're facing at the moment. Okay, so that's the kind of general overview. So what happens next in terms of the coronavirus? The Chancellor talked about to be prepared for a significant impact on our economy. The impacts will vary very significantly by sector, by individual firm and by marketplace. And this is one of the really challenging things with an economic shock such as this. It's very hard to see how the ripple effects will come through, and they will vary very significantly by individual business or individual locality. Broadly speaking, we would expect that firms that are exposed on the social side to social spending, so things like restaurants, things like entertainment services, things like tourism, they're probably likely to be in the front line in terms of an immediate hit, in terms of lost demand. But then the ripple effects through the economy will vary quite significantly by individual firms, how they're impacted, what's the impact in terms of their workforce, what's the impact in terms of the supply chains and so on. And anyone who tells you they know how it's going to impact or it's going to have an effect, then don't believe them, because we don't. It's going to really vary significantly as we go. What we do know is that what's going to be absolutely crucial is the ability of each business in order to flex their activity through any short-term disruption. So what's their ability to be able to offset any impact on demand? So how much cash have they got in the bank that they can draw on to get through a period where the economy might be shut down for 3 to 4 weeks? What's the impact on their employees? So what happens if one or two of their core employees are self-isolating or off sick, or self-isolating looking after children or elderly parents or whatever? What's the ability of each individual firm to respond to that? Will be really quite crucial. And then, of course, there's the impact then on supply chains. So your business might be quite fine, you might have lots of cash in the bank, but if somebody else in your vital supply chain takes a hit, then that can feed through to what happens to you. So flexibility in this context is crucial. So if this is just a pandemic that is temporary, that peaks and then comes back down, the most fundamental important thing is flexibility and resilience for businesses at this particular point in time. How long could this take, and what the potential scale of this impact? So quite interestingly, the Chancellor was talking about at any one time to expect that up to 20% of the working age population could be off work. So a really significant, potential shock to our economy at any one given point in time. And one of the challenges actually with this is that the bigger the policy response to try and mitigate the long-term effects of the crisis, the bigger the short-term economic hit. So, for example, if you start closing schools, if you start banning major sporting events, if you start restricting travel and so on, then in order to try and offset the health impacts and to try and make sure you recover strongly in the long run, the greater the potential for short-term disruption is going to be. So there's a really interesting trade-off which government are trying to balance at the moment between closing down your economy and seeing a significant hit for businesses and actually keeping things going that you can still have some momentum there for when things come around. However, if the effects of the virus are temporary, which all medical advice seems to be, then we would expect that the impact at a macroeconomy level will also be temporary. So things where you have people taking time off work, where holidays are postponed, then you would expect to see a bounce back down the line. So one of the things that we need to be really careful on is any economic data is going to be exceptionally volatile over the next wee while. So remember the beasts from the east, that took about 0.3, 0.4 percentage points off growth, but that was just a partial shutdown for a week. If you shut down on a much more significant scale for a longer period of time, then the potential for GDP numbers, for example, in any one quarter to really be quite scary, quite significant, would be quite high. But then they will bounce back as activity comes back on stream there. So there's a bit of reassurance needed from everyone involved in policy and government about the potential volatility that we're going to see over the next wee while. And of course, any gumming up of supply chains, any delays, will have a positive impact further down the line as things kick in and recovery works through. What would the medium-term outlook on all of this? So as a macroeconomist, you can turn around and say it's all right, don't worry, it'll be a volatile period, but we'll get back to growth again. For individual businesses, though, it could look quite different. And key in all of this will be the resilience of individual businesses and what we can do to try and support individual businesses through no fault of their own are likely to either see significant hit to their demand or significant hit to their supply potential. So in all of this context, there's a really important role for the entire system to work collectively together to try and address the situation. So a role for employers, a role for trade unions, a role for government at national and local level, and agencies to put in a coordinated response. So what's happened so far in terms of our policy response? Well, I guess the first thing to say is I think we're very much in an early stage in all of this. The government is still trying to work out the timing of all of this and what's the best possible response. But we've seen two major shifts already this week. The Bank of England cut interest rates by half a percentage point, back down to the lowest level they've been since the financial crisis. They have talked about doing other things, if need be, to try and get money flowing around the economy, whether that be further quantitative easing or further mechanisms that they might do. We also had the budget, whereas we usually make a joke that economic forecasts are usually wrong after the event. Interestingly, because they had to rip up their forecasts before the budget, this was the first ever time I know of economic forecasts being wrong before an event. But it was quite interesting, just again, the pace that this is moving, where you essentially have a budget document that is already out of date by the time the Chancellor stands up to actually read out what's in his budget document. Just shows you the pace of the change that we're dealing with at the moment. But what the budget did was quite interesting, and actually, to be fair, quite well targeted, looking at where there might be issues in the transfer of the virus through the economic system. So first of all, measures targeted at employees, so widening access to things like statutory sick pay, relaxation of rules to universal credit and so on for people who are self-employed, investments in the administrative process to try and get the system moving more quickly so that if you've got a problem you can get help more quickly, support for small businesses, so refunding statutory sick pay for up to 2 weeks, scaling up the time to pay initiative, so that's if businesses struggle, then what they can do is speak to HMRC to get some leeway in their paying back of taxes, and a new loan scheme up to 1.2 million for any business that is potentially in trouble that can go to a bank, and that will be underwritten by the government. And of course there's business rates, and the business rates holiday for retail, hospitality, and yesterday the First Minister announced the Scottish Government would follow suit with some package that they would do on business rates. One of the things about all of this is this looks quite good on paper. One of the challenges of making it work in practice. So if you're self-employed, for example, you might have very little, if any, experience of reaching out to the welfare system. So how do we get self-employed businesses to know that there is potential access to universal credit, even if it's smooth, even if it's quickened up? If they have no way of navigating through the system, how will they do that? Similarly on things like for employees or small businesses. You know, if you're staring into the potential abyss in terms of short-term demand, are you going to go along and take out a significant loan from a bank if you're worried about what might happen over time? So this looks good on paper. One of the issues will be is how does it work in practice, and how can we make sure that the objectives here are delivered in an effective way. And then finally, we know it's got some implications here for Scotland. Again, there's lots of noise and confusion about the numbers and how much money the Scottish Government is getting to all of this. So just to separate this out for you, in the budget document there was an additional 640 million of money allocated to the Scottish budget. That actually comes on the back of about £1.2 billion already allocated. So even before the coronavirus response, the Scottish budget was going up by about £2 billion. What's then happened since, and what the confusion has been about, but what's happened since is that the measures the UK government have announced around supporting an immediate response to coronavirus will actually give even more money to the Scottish government budget for next year. So there's probably about an extra 350 million of consequentials coming in to help support on business rates. So that's additional spending. Plus also there's a pot of money sitting in the accounts, about 5 billion allocated towards the NHS, which hasn't been allocated yet, but will become once the emergencies kick in, if money is needed that it can draw on. So already we've started to see the first stages of a potential response. I think the UK government, the Chancellor, announced that he would do what it takes in order to try and deliver a response. I think one of the really interesting things for you guys at a local level is that you'll be at the front line of identifying businesses that are under stress, making sure that they get the right advice and support that they need. Also about delivering many of these potential mechanisms around business rates, about understanding where supply chains, etc., are going to be really important in all of that. So that's what we know so far. I wouldn't admit to saying that we know absolutely everything yet, but that's essentially, I think, where we are at this moment in time. But it's very much a fast-moving environment, and that I'm more than happy to answer any questions.
I think this is one session where you will get a number of questions, Graeme. Thank you for that really informative input. And as you say, it will be very challenging to try and balance the health issues against economic issues. And I think in particular for the small business, the self-employed and those in precarious employment who may not want to heed the health advice for economic reasons as well. So there's a whole mix of dynamics that are going to be at play out there. So taking up Graeme's kind and timely offer, there's an opportunity to really gain from his expertise some food for thought. So can we look at some pertinent questions, please? Take the benefit of having him here. And as I suspect, hands are going to go up. So we've got Hannah, I think, is there a roving mic at the back? Yeah. Yeah, I can, if you want.
Great, I mean, it's quite a quick question. Yeah. I mean, very helpful and very clear. But I mean, given your experience, what do you think might be one of the most unexpected outcomes of this? I mean, we can always plan for what we think is likely to happen, but what sort of curveballs do you think might be there as a result of what's going on?
It's a really good question. Yeah. So the known unknowns and unknown unknowns and things like that. Yeah. I think the issue will be is. So I think the big issue for me will be is that understanding the ripple effects of this through the economy is really quite unique. So with the financial crisis, you knew at least where the epicentre of the crisis was, so policy could be really targeted at that. And you knew it was the gumming up of lending, you knew that it was the access to bank finance that was really the core of where the issue was. So you could throw resource at that and try and tackle that, shore up the banks and so on. I think with this, the problem is that the effects will be really quite, disparate across, and its potential for them to potentially mothball and grow in particular areas. So you could see, for example, particular communities particularly badly affected, and if it's in a sector, say in tourism, for example, where it could actually grow and build quite high momentum and all of that. I think the issue then is about what the unknown part of it is. I think quite rightly the government are very much focusing at the moment on the immediate response. I think what we need to also think about is what happens when the recovery. So if this is a 3-month peak and then back down again, we'll be out of this in 6 months. But for companies and individual businesses, that could look quite a rocky experience. So how do we support them through that and then kick on to the recovery that ultimately comes?
Yeah, thank you. Rory? And I suppose if you say who you are, just so Graeme is aware of that.
Hi Graeme, I'm Rory Young from Dundee City Council. I'm chair of the performance group for Slade. It's really interesting how circumstances change your presentation, and I would imagine that 3 weeks ago, you might have been talking about a year hence we'll be looking at the impact of coming out of the EU, what that looks like. I'm just wondering about your perspective of this economic shock, which might be short term, and then followed by the impact of coming out of the EU, and whether or not this period of emergency may distract businesses from that longer term planning around that.
Yeah, it's a really good question, and I think one of the big challenges of this is that a lot of the resilience that some businesses might have been trying to build up in order to prepare for Brexit get wiped out by what they need to do here. And that's not just small businesses, but a lot of the big businesses. So you hear stories about big businesses already implementing their contingencies for a no-deal Brexit already. Potentially we've got that further down the line. I mean, obviously there's now a big debate about what will happen to the negotiations around Brexit. I don't think there's any appetite across any part of the EU to kick off these discussions, so it's possible that that Brexit may be further, well, at least the economic exit in terms of access to the single market may be pushed further back into the future. So I think a lot of this is still really quite uncertain about where we're heading in all of this. I mean, but one final point I would say is that the discussion that we've actually been having earlier today, just been listening to it about the role of transition to a low-carbon economy, about the role of well-being, the role of inequality and inclusive growth. One of the things is that that's not going to change. There's going to be a really short-term bumpy period, but we cannot let the much bigger structural questions about where our economy is heading being squeezed out. So I'm sorry, this is not something that's replacing something on your to-do list. This is just something that's going to add to make that list longer.
Okay, thank you. Other questions? Yeah, over at the back here.
Thank you very much for this informative presentation. Graeme from Angus Council. Have you developed scenarios of the impact of coronavirus in terms of this last 3 months, 6 months, a year? And how resilient is our economy to cope with different scenarios? And what advice we can give to our local economies to meet, different, to cope with the situation, different needs, different demands, is there any particular advice? Thank you.
Yeah, so one of the things that we're saying to people, and we're being quite clear on, is not to try and attach specific numbers to this, because any number you do give will be wrong, because literally we don't have enough information about the potential, A, the potential scale, B, the potential ripple effects, and C, then how this will then impact upon core sectors of your economy. I think so. My advice would always be is that slide I had about the avenues through which this will have an impact on the economy on the demand side, so in terms of sectors most exposed, in terms of a drop-off in social spending, so retail, restaurants, hospitality, tourism, they'll be at the front line in all of that. Secondly, understanding about where there's particular concentrations where any issues around employees might have an impact, particularly people who have caring responsibilities. What happens if schools close will potentially be a major driver of outcomes and all of that. And then thirdly, thinking about supply chains. So I think a lot of this is about giving people information. There's a lot of responsibility on banks, a lot of responsibility on policy to smooth businesses through this period, and also to provide the reassurance that the latest health advice is that this will be temporary and most people will be unaffected by this, so the economy will bounce back. It's just that the next few weeks, if the economy shuts down, will be particularly significant. And I guess building on that, trying to reassure people that the scale of the response, the bigger the scale of the response in the short term, the bigger the hit to the economy, but that's clearly for good reasons. So not to panic if it gets really quite slow for a while.
Thank you, Graeme. I think we have another question there from Fergus.
Hello, Fergus Murray from Argyll and Bute Council. I think this COVID has happened at a very bad time for our tourism industry, which is 25% of our private sector jobs, because they were expecting a cash flow to come in. So I think what I'm very concerned that this virus has exposed the fragility of our economy at a national level. There could be really significant hits in rural areas. Will our tourism industry be able to recover? So I think it's just about, when you mentioned the west to east, that this really will expose this, and maybe this is something as a nation we're going to have to look at in terms of accelerating our sort of examination of the economy and the balance between the west and the east. But the last thing was that tourism, well, already are getting approached by businesses really under stress. I mean, in terms of getting them through, but what do you think might be the best way to try and kickstart them again after this passes through?
It's a really good question, and already some of the stuff businesses that we speak to is saying that tourism is at the front line of that, particularly on the West Coast. And you're right, the timing of this is just the worst possible timing as you're starting to come into the summer period. I do think that's where potentially the Scottish Government might want to think about where they target some of the response, or the particular sectors that they might want to inject a policy response to. So they've got additional spending. They don't have to exactly follow what's happened in the rest of the UK. So in the rest of the UK, their focus was largely on business rates around hospitality and things like that. Now, there might be something that the Scottish Government might do there, accepting the fact that most small tourist companies will not be paying business rates anyway, so you might have to think about what else you do about that to actually give an injection into that. So I think there's some interesting policy questions that the government will probably wanting to think about now in all of that. I think then you start to get into what do you do in the recovery phase, and a lot of that has to be about encouraging people, particularly local in Scotland, to go on holidays locally, to support local tourism. There's been quite a successful thing happening in Australia after the bushfires about campaigns to have more events and more activity and staycations in communities that have been impacted by this. And I think there is, again, potentially roles around that to try and encourage more demand there. But you're right, there's a much bigger question here about the resilience of our economy to events such as this when it happens so quickly.
And just before we move on to another question, just on the back of that, the Scottish Government is asking for ideas and asks from local government. So I think post the conference, if through Slade and COSLA, we can look at combining some ideas for us and making some demands on government in terms of how the money might be dispersed, then that might be a helpful approach there as well, rather than just waiting and reacting to influence where we might want to see some of the funds directed. Any other questions for Graeme? Yes, Andy at the front. Hannah's just on her way. She's getting her steps up today. Yeah, you want to?
Thank you, Hannah. Hi, Graeme. A couple of kind of link points in a sense. I mean, you mentioned the bounce back effect earlier on, and I guess it's my question's around to what extent does that bounce back make up for some or all of the deferred spend, investment, whatever. The other point though is that in any of these crises, there's always some winners, some kind of outliers. There's people who bet against the market, and etc. in 2007. So, what is your sense of where the coronavirus sits? For example, relative to the 2007 crash, in terms of the overall net effect that there's likely to be, relative to offset or deferred spend, investment decisions, growth, etc.
Yeah, so it's a good question again. So I wouldn't pretend to know all the answers to that. A lot of the driver of this will be how long this lasts. So if, for example, you don't go out to a restaurant for the next 2 weeks, because you're trying to minimise your exposure, you're self-isolating, well, that's not likely to mean that for the next 20 years you're going to go to restaurants on a less frequent basis. So on that part of things will bounce back and return to normal. The question, though, is that the longer it lasts, the potential impact on individual firms to no longer be able to survive, that's where it becomes much more serious. And I guess one of the points just the gentleman over there was making around the point a bounce back, that's okay for me to say at a macro level. Underneath all of that, there'll be lots of redistribution and lots of impacts by local area, by individual businesses, The stronger businesses will be the ones that will be more able to cope. The weaker businesses are the ones that will be more exposed to all of this. The ones who their nature of their business means they don't have cash flow, they're potentially the ones to be more likely to expose. The ones such as tourism that are much more at the front line of this are the ones that are going to be impacted. So at a macro level, things, if this is temporary, should recover, and provided this has no long-term impact on the productive capacity of our economy, then we should return to trend levels of growth. But the distribution of who wins and who loses in all of this will look quite different.
Okay, can we maybe just take one final question if there is one, and we'll let Graeme go, because we could have him captive all day on this issue. Irene at the front here.
I was just wondering, with the reflections and what you were saying about encouraging people to do a staycation and not travel abroad, what are the opportunities, given our title today about local government's contribution to an inclusive and sustainable economy, what are the opportunities here to actually contribute to that, both when we're looking at habit change of our population, and also that support that government will be putting out? Is there a chance to do something with that? I'm thinking back to the 2007 when we bailed out the banks, but without actually putting enough kind of thought into how they were being assisted.
Yeah, that's a great question, and this is where you start to stray into the kind of more politics with a small p policy agenda. And I think there is a question, again, a bit like where we were with the financial crisis, but even over the last 10 years, and then we are now, about how resilient is our economy to coping with change. And a lot of the stuff you've been speaking about already, like the just transition, like the role of anchor institutions in building up resilience within communities, ensuring that local spend stays locally, about giving appropriate opportunities for jobs for people, and tackling inequalities, about giving resilience to local areas, local markets, building up sustainable models of business that are not relatively precarious. I think there are some really big questions in all of that about the actual underlying structure of our economy that something like the coronavirus will really quite expose. And then also questions about what's the role of policy within all of that, and how quickly can we respond to shocks, to challenges, and to change, and what are the wider implications to all stuff: climate change, technology, ageing population, regional disparities of growth. I think your question is entirely right. I think there's an opportunity to start to rethink that entire long-term model through the lens of something like this.
Thank you, Graeme. And as Graeme said, we still have all the normal issues to start discussing as we go through today, and we can't allow the coronavirus to overtake that, but it will feature and it will be relevant to all the debate that we continue to have today. Can we show an appreciation for Graeme? I think that was an excellent input.